Oil markets were caught unprepared yet again in a move that many will see as historic and potentially transformational. The United Arab Emirates has announced that from the 1st of May, it will no longer be a member of the Organization of Petroleum Exporting Countries, OPEC. This is not the kind of decision that is made overnight. Rather, it appears to be the culmination of pressures that have been building for years and have now reached a breaking point. In this episode, we ask what pushed one of OPEC's most influential producers to walk away. What does this mean for oil markets already under extreme strain? And more fundamentally, is OPEC still relevant in today's energy world? Hello and welcome to Global Business Insights. I'm Bodio Shosami, bringing you analysis and updates that help you navigate today's context. At the heart of the UAE's decision lies the changing nature of conflict in the Middle East, and more specifically, Iran's role in it. Iran has not only targeted the energy infrastructure of the UAE and other Arab states perceived as allies of the United States, but has also taken actions that have effectively held the global oil market hostage. The closure of the Strait of Hormuz, whether through direct action or indirect pressure, has sent shockwaves through supply chains, investment flows, and energy policy worldwide. For Gulf producers, the consequences have been quite severe. Suddenly, billions of dollars in investments look far less secure. Energy infrastructure, once considered untouchable, is now a frontline target of attack. And the idea of Arab unity within OPEC begins to look increasingly fragile. For Abu Dhabi, this raises a fundamental question. Does OPEC still function as a protector of members' interests, or has it become a constraint in an increasingly volatile world? The UAE's official explanation is clear and consistent. It says it needs unrestrained production capacity, the freedom to respond quickly to market shocks, protect state revenues, and act in the best interest of energy consumers as well as its own fiscal stability. But this desire has long conflicted with OPEC's quota system. For years, Abu Dhabi pursued ambitious investment plans to raise production capacity only to find itself constrained by group quotas. At the same time, compliance across OPEC has been notably uneven. Some members quietly overproduced, others struggled to meet targets, yet those investing billions to expand output found themselves held back. The war has not created these divisions, it has exposed them. Then there is the issue of Iran itself. Despite being one of OPEC's founding members, Iran is exempt from mandatory production quotas. That exemption exists because international sanctions, primarily imposed by the United States, already restrict how much oil Iran can sell on global markets. Libya and Venezuela enjoyed similar exemptions. These countries participate in policy discussions, yet are not bound by barrels per day limits that apply to others, ostensibly to support their domestic oil industries. For fully compliant producers like the UAE, this has been a long-standing source of quiet frustration. The UAE's exit also confirms that it is no longer convinced that the sacrifices it made through production cuts delivered any meaningful benefit. Instead, those sacrifices eroded market share, limited national revenue, and reduced the country's attractiveness for future investment. And there is a deeper irony. According to UAE Oil Minister Suhail Mohammed Al-Mazri, Iran, another OPEC member, has attacked UAE energy infrastructure with thousands of missiles and drones, while contributing to actions that shot in millions of barrels of Middle Eastern oil. According to U.S. Energy Information Administration estimates, Gulf producers collectively shot in around 9.1 million barrels per day in April due to disruptions linked to the Strait of Hormuz. And yet, markets barely reacted to the UAE's departure. Why? Because until Hormuz opens, the supply situation remains structurally constrained. This is not the first time frustration has spilled into the open. In 2023, Angola's oil minister, Diamantino Azevedo, then declared that OPEC no longer served the country's interests after bitter disagreements over 2024 quotas. For Angola, where oil accounted for 90% of exports, higher quotas were essential to attract investment and sustain growth. Oil prices fell 2.4% that day on concerns about OPEC unity. This time, prices barely moved, the stark reflection of how market power may also have already been lost from what the group used to have. The exit also reflects shifting geopolitics. Saudi Arabia and the UAE are no longer as closely aligned as they once were. Riyadh has accused Abu Dhabi of supporting separatists in Yemen, claims the UAE denies. Another key factor is global investment. Gulf producers are facing declining interest as risk-averse oil majors increasingly turn to Canada, the United States, and even Venezuela. In a tight market with soaring prices, membership in a production-limiting cartel may have become a competitive disadvantage. So what happens next as medium-term supply improves? Much depends on whether Saudi Arabia or Russia responds by raising production to protect market share, potentially triggering a breakdown in quota discipline. For countries like the UAE and other members, the logic becomes clear. To maximize windfalls before prices fall back, the fastest route may be outside OPEC for those who have capacity to do more than OPEC is likely to impose. But there are also increasing philosophical areas of divergence. UAE Oil Minister Al-Mazri has been unusually forthright in speaking about the inevitable decline of fossil fuels, arguing that assuming oil demand will last forever is wishful thinking. The UAE has committed to net zero by 2050, signed also a $100 billion clean energy pact with Washington, and is actively positioning itself as a bridge between traditional energy and a post-oil future. For a country aggressively courting Western partners and leaning towards climate-friendly solutions, the benefits of OPEC membership may suddenly look far less compelling. With Qatar, Ecuador, Angola, and now the UAE out, Saudi Arabia and Russia may struggle to hold the group together. OPEC has survived crises before, and Saudi Arabia may respond with little more than a strategic shrug. But if another major producer exits, questions about OPEC's long-term survival will become inevitable. Meanwhile, the conflict driving much of this instability shows no sign of easing. Brent crude has climbed above $110 per barrel, reflecting fears that the war could become protracted, and concerns continue to be reinforced by failed Islamabad talks and US President Trump's sharp remarks on Iranian ceasefire proposals. Iran's options are also narrowing. Trump's blockade is squeezing Tehran's economy and oil sector. With storage at Kag Island nearing capacity, Iran has reactivated aging tankers for floating storage. JP Morgan estimates Iran has 20 to 26 days before it may be forced to shut down oil wells. The alternative route, diverting oil to the Jask terminal via the Gore-Jask pipeline, offers limited relief and may already be near capacity. If Iran is forced to shut in wells due to lack of storage, the damage could be permanent, and restarting shut wells is technically complex and could be costly. Beyond the $430 million per day in lost export revenue, permanent field damage would be a long-term economic disaster. These risks likely explain Tehran's renewed calls to reopen the Strait of Hormuz, even as it seeks separate negotiations over its enriched uranium stockpile. For now, Washington has little incentive to ease pressure. For markets, the central questions are: when will the Strait of Hormuz reopen, and how long will it take for supply chains to recover from this energy shock? Also, is OPEC still needed? Can OPEC evolve to be more relevant beyond quotas? And as for OPEC, like the proverbial cat, my guess is that it may yet land on its feet. But if it is to survive in the long term, it may not be as the same institution it once was, as members call for reforms. To another main story, in a speech to America's Congress, King Charles III did his best to salvage a battered special relationship. He also stressed that the two countries have worked closely together on defense and intelligence for decades. The day ended with a well-attended White House dinner where remarks hopefully further cemented the fragile bond.
So, ladies and gentlemen, we meet in times of great uncertainty, in times of conflict from Europe to the Middle East, which pose immense challenges for the international community and whose impact is felt in communities the length and breadth of our own countries. We meet too in the aftermath of the incident not far from this great building that sought to harm the leadership of your nation and to foment wider fear and discord. Let me say with unshakable resolve, such acts of violence will never succeed. Whatever our differences, whatever disagreements we may have, we stand united in our commitment to uphold democracy, to protect all our people from harm, and to salute the courage of those who daily risk their lives in the service of our countries. Standing here today, it is hard not to feel the weight of history on my shoulder, because the modern relationship between our two nations and our own peoples spans not merely 250 years, but over 4 centuries. It is extraordinary to think that I am the 19th in our line of sovereigns to study with daily attention the affairs of America. So I come here today with the highest respect for the United States Congress, this citadel of democracy created to represent the voice of all American people to advance sacred rights and freedoms. Speaking in this renowned chamber of debate and deliberation, I cannot help but think of my late mother, Queen Elizabeth, who in 1991 was also afforded this signal honor and similarly spoke under the watchful eye of the Statue of Freedom above us. Today, I am here on this great occasion in the life of our nations to express the highest regard and friendship of the British people to the people of the United States. Our two countries have always found ways to come together. And by Jove, Mr. Speaker, when we have found that way to agree, what great change is brought about, not just for the benefit of our peoples, but of all peoples. This, I believe, is the special ingredient in our relationship. As President Trump himself observed during his state visit to Britain last autumn, the bond of kinship and identity between America and the United Kingdom is priceless and eternal. It is irreplaceable and unbreakable.
Well, that's all we can take on this special edition of Global Business Insights. I'm Bode Oshosami. Don't forget to subscribe and hit the notification button. Bye-bye.